I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show for May 25th. It's Wednesday, and this is the interest rate update. Be sure to subscribe, like the channel, comment if you have any questions or any comments, of course. And this is for informational purposes only.
That's right. We're smart, but we're not that smart, folks.
That's right. So where are we today? We see rates, the 30-year fix, an eighth lower. So we see yesterday was 4.875. Today we see 4.75%. The 15-year fixed at 4%. Yesterday they were 4.125.
The 5-year ARM, the same. So 4.49. The 30-year FHA, the same as yesterday, 4.5. VA 30-year, 4.5, same as yesterday.
And really important, these rates have 0 points. There's no points associated with these. So there's no extra fees. There's only standard fees, but like that the lender would charge. There shouldn't be any extra points.
Right.
And a lot of lenders are charging. If you look at the fine print, I was on some of the biggest banks in the world, right? The biggest ones that are advertising. 2 points.
Yeah, right.
They're the ones that they show you the rate, and the rate's even high. The rates are like 5.375, and then they have like 2 points, like in the fine print.
Right.
So
something else that we can just mention real quickly. When you say you have no points, that's what we call kind of par pricing, because these interest rates are available, every day of the business week and year, and these interest rates either have cost to it or they actually have a credit to it. We would always quote typically a par rate.
Yeah.
So again, no extra fees, no hidden fees.
Yeah, and I'm going to say a quick thing about locking interest rates today. I mean, we don't know where rates are going to go in the long run for the next 30 days, or I should say in the short term, the 30 days. I think now, if you are thinking about getting a home, buying it, there's nothing wrong with locking in these rates. Don't be thinking that these rates are going to get lower. I would say that right now is always a good time in this little bit.
Yeah,
Okay.
absolutely. Like we say, it's time in the home, not timing the home.
That's right.
It just is so important.
All right, so we're going to look at the big picture here. 30-year fix since 1971. Rates peaked in 1981 at 18.3%. And, I've showed this channel a lot from 1986. And what we are just going to, what is that? It's almost 40 years. I always forget it. It's like 30. It's what, 38. No.
Yeah.
36 years.
Yeah, almost 40.
So 36 years of just being in this downward channel here. Now, what you'll see are these little highlighted yellow line or yellow squares. Those indicate the periods of time during recessions. And we're probably in a recession right now. The data probably will be coming out. We've been talking about recession. You've been, you all have been probably hearing about recessions as well. But if we're in a recession, what does that mean for rates? It means that rates will probably go down.
Or at least definitely not go up.
Yeah. I mean, like 6 out of the 7 last recessions, interest rates go down. Take a look right here. This is COVID, COVID time. Here's the big recession here. Recession in 1992, 1990. No, this is the .com recession. 1992. This is 1982. Yeah, 1982. We will see as the rates going down during those recessions really important. That's what I thought that would be helpful to see.
Yeah. If this is worth anything, one of the reasons why, and again, this is can get very, very technical, but people flee to that bond. They go to the most stable return on investment that they can during those recessions. And as people buy up all these, bonds for these mortgages, the actual bond companies don't have to, advertise such high interest rates in order to attract investors. Yeah. So that's one of the reasons why, these rates get better.
That's right. So if we're in a recession right here on the very bottom right here, if we are starting a recession, that's what's we do believe that rates will come down eventually. Now it'll take a while, maybe 12 to 24 months is my guess right now. My forecast that rates go back down to this channel, but
show this next slide. And if you look at the dates there, it's incredible how it correlates.
So I was showing you that channel in the earlier slide, but look, this is 1986. What happened in 1986 between then and now? Well, U.S. debt went from $2 trillion to $30 trillion. Every single time we hit a recession, what happens? More money, more debt.
Mhm.
You all
Need
probably
more
been hearing.
need more help.
Yeah.
It's like your kids calling you, be like, "Hey,
Yeah.
I need some help. Can you guys send me some money?"
That's right. And you'll hear about all your House representatives and the senators. Oh, we have a new package, a new bill. Well, those bills are basically adding more debt. So that's what's happened since
Mhm.
1986 till today. Just massive debt. We're addicted to it.
Yeah, and when we say we, the actual country, and people think the country's so big, like they're their own bank. I mean, I guess kind of in a way you could say that, but they have debt. They have like monthly payments they need to make. So as you see their debt go up, they have the ability to control the interest rate. So isn't that nice to be able to push the interest rate down so that their debt isn't as expensive?
You're right. Look at COVID. It was like
Yeah.
a massive
Yep.
cliff there.
Boom.
Okay. Well, everyone, again, be sure to subscribe, like. We do this Monday through Friday, giving you the interest rate updates, talking about some of the important things that are going on in the market. And we'll be back tomorrow.
Okay. Thanks a lot,
Take care,
folks.
everybody. Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.